President Biden is discussing inflation and high prices in Los Angeles today. Inflation is at its highest level in 40 years. The Consumer Price Index jumped to 8.6% in May. Year over year, that is higher than expected.
So joining us now for more on this is Jared Bernstein. He's a member of President Biden's White House Council of Economic Advisors. Jared, welcome. It's so great to have you with us. So, as you know, the Consumer Price Index released today by the U.S. Department of Labor reveals inflation rose to its highest level in more than 40 years. I mean, that's telling the American people what they already know, right? Because they're feeling it in their pocketbook. So what is the administration doing to mitigate these prices, both in the short and long term?
Look, it's a report that's a reminder why the president continues to talk about these price pressures as his absolute top domestic priority. You mentioned his discussion today out in the ports of Long Beach and LA. And in fact, there, to answer your question, we've engaged in a very deep agenda to help things move through the ports more quickly. And we made a lot of headway. In fact, the throughput, the rate at which goods are getting from ship to shelf, actually hit historic highs in the past 2 quarters, and shelves are stocked at rates much like before the pandemic. I'm putting aside baby formula, which is a separate problem with a separate set of interventions, but shelves are basically back to where they were. Now, that doesn't take any of the pressure off us because there are still, as you've mentioned, significant price pressures directly connected to the Putin price hike, the conflict in Ukraine, particularly pressures on energy and food. They explain half of the monthly increase in last month's inflation.
Well, you said it. And with those big contributors like food and gas and shelter, a number of Americans are having a difficult time because they don't know when these prices will drop. How much longer until we can expect to see some real change and reduction in those prices?
Well, look, I mean, I can cite forecasts from the market forecasters that tell us inflation should be growing slower towards the end of this year and into next year. Certainly none of the forecasts have it down to levels, though, that we think and that this president believes are most comfortable for American households. So we really have 2 tasks. One is to maintain the very strong economic backdrop that's going on amidst all of these price pressures. The strongest labor market in generations, the lowest unemployment rate, the biggest decline in unemployment last year on record, a rate 3.6% that looks much like that before the pandemic, 8.7 million jobs, household and business balance sheets actually in good shape. And that's not immaterial. That's one of the reasons why we still see strong retail sales, families out there engaging in travel, but they're running right into these price pressures. So part 2 is the three pieces of the president's inflation reduction agenda. Trust the Fed, let them do their thing independently, work with Congress, and we really need Congress to work with us to lower costs. And 3, bring down the budget deficit, $1.7 trillion historic deficit reduction this year under President Biden's watch. That should also help ease inflationary pressures.
Right, and those are very real indicators, for sure, and it's worth mentioning those. However, the Federal Reserve is expected to hike interest rates again next week in response to these surging prices. But there are concerns that could help plunge the economy into a recession. I mean, I think about all of those Americans out there who you said are continuing to spend, right? But we know that some of them are continuing to spend on credit cards. So some of that is going to become credit card debt whose interest rates are going to go up, right? So what steps are being taken to ensure that that doesn't happen and lead to some sort of economic downturn? Because like you said, right now the indicators are strong.
Yeah, this is a really important area of discussion. So let me start out by saying what we mean by recession. I don't mean we, the White House, I mean economists. It often gets kind of abbreviated into consecutive quarters of GDP decline, but really more technically, it has to do with an increase in the unemployment rate, something we very much haven't seen. The unemployment rate, of course, has come down very quickly to a level that's just about where it was before the pandemic. It has to do with job loss. Well, in fact, we've been adding 400,000 jobs per month. It has to do with declining consumer spending. We've seen very solid consumer spending. Now, you mentioned debt. In fact, debt service, meaning the amount of money that people have to pay to service their debt, is at an historic low. And that's a very good indicator, because the last recession, the Great Recession back in 2008, where I was Vice President Biden's chief economist, household balance sheets were a mess. Actually, now they're quite strong. And that is an important buffer in this discussion.
That is important.
I know, household, by the way, that's news to my ears, and it's also good news, I have to say. Jared Bernstein, we thank you so much.
Great talking to you.